Yo, what is good, YouTube? We are back with another episode of the Trading Den V2 internal versus external liquidity. And ignore my hair. I just went on a run and just got done swimming, and then I decided I'm going to make this video and a few more for the upcoming days. So we're going to go over internal versus external liquidity, right? This is how I identify my bias on the higher time frames, let's say the daily, weekly, monthly, right? And this isn't how I'm identifying my bias intraday, right? This is how I'm getting a feel for where the market wants to go over the long term, right? So if I'm expecting the daily chart to expand higher, I'm using internal versus external liquidity. If I expect the weekly to have an expansion higher, I'm using internal versus external liquidity. But like, let's say on the 1 hour or the 15 minute, I'm just scalping, right? But on the long term basis of things, I'm using internal versus external liquidity. So these examples are going to be daily, weekly, monthly, and we'll go over some 1 hour and 4 hour as well, so you guys can understand it on the lower time frames, because I will sometimes, if I'm looking for a 5-minute setup, I'll use internal versus external. So let's get right into the video. And yeah, if you guys are not in the free Discord, go join it. It is the first link down below. But let's get into it. So internal versus external liquidity, right? What is internal liquidity? Internal liquidity is fair value gaps, right? So whenever we have an internal liquidity pool, it is going to be identified as a fair value gap, right? And the thing about internal liquidity is, let's say we have a daily fair value gap. That fair value gap on the lower time frame is going to be a 1 hour, 4 hour liquidity pool, right? So that becomes external, right? So external liquidity is high and lows, right? So very self-explanatory. Internal versus external liquidity. Internal is your fair value gaps, and the external is old highs, old lows, or just highs and lows in general. So let's go look at this graph right here. So right here, you guys can see that we have this range, right? Let's say we're on the daily chart, right? And let's say that this right here, this high came into a higher time frame key level, right? So you always need to be trading off key levels. So let's say this high actually came into a key level, an order block, a fair value gap, whatever. So it came into a key level, and we get this displacement lower. So we have a new range being set. What is happening in here? This is your internal range, right? Whenever we have a high and a low, and you're scalping inside of here, this is going to be your internal range, right? So let's say this high right here, right? We come up, make this high right here, came into a fair value gap, right? This came into a fair value gap inside of what, right? Premium, right? So right there, we have a premium fair value gap up here. So don't worry, I will go into premium and discount later on. So what do we have right here, right? So this is going to be a high that is turtle souped to go into a fair value gap and then displace lower. And notice right here, before we get down into this low, where do we go? Let's say we have another fair value gap right here. So you're framing your trades from displacement, come into a fair value gap, to go take the external liquidity pool, right? And then on the lower time frames, right, this would be your external sell side. So right here would be your external sell side on the lower time frame, but on the higher time frame, this is your external level. This is whenever the highest quality trades come into play. Whenever the internal range is in confluence with your external model, right? So right here we have an external model, but right here we have our internal model that is in line with the external model. So right here becomes your highest quality trade. So what happens over here? We purge that low and immediately displace back inside of the range. We visit a fair value gap. So this becomes what? External on the lower time frame. What happens here? Displace higher, revisit this high and a fair value gap. This becomes what? Your external on the lower time frame. And right here is your highest quality trade on the lower time frames. Why? Because your internal model is aligned with your external model, right? So another thing that you see here is sell side into what? Buy side of the curve, right here. Sell side into buy side of the curve. So this is your market maker model. Don't worry, we will get into that as well. So let's hop right into the daily chart, or the monthly actually, since I'm already on it, and take a look here. So let's take a look at what? This price action right here, right? So from this low to this high, what happens? So we come down, take this low, revisit all these imbalances, and then displace out of here. We have our market structure shift at this high, and what do? We come into internal range liquidity, discount of the range, right? This low to this high, and then we go purge external liquidity, right? So this is your range right now, this high to this low, turtle soup at this low, right? And then displace back inside. We take these highs, right? And then we come down, make a low, displace out of here, revisit internal range of liquidity, and then we go purge external, and then finish the model off at this high. But take a look, what happens when we take external liquidity? Fair value gap. Right there. What happens after that? External liquidity, right? Buy side. So you frame a model on the lower time frames right here. If we're swing trading, right? We revisit internal, so we go to external, right? So why haven't we gotten immediate displacement up to this high? We have no fair value gap, right? We did come down and revisit this one, so I could see this high maybe, but this is where you go to the weekly chart. So the weekly, let's take a look right here. What happens when we take external liquidity, right? So we come up, we purge buy side. Where do we revisit? Internal range liquidity, right? Let's actually mark this off as a fair value gap with a box. Fair value gap, and where do we go? External liquidity, right? What happens here? We purge external, we create a fair value gap. Where do we go? Fair value gap, external range liquidity, right? So we have a high, come down, revisit internal, and then we rotate to external. Right? So you guys are noticing this is pretty easy to understand. What happens here? We purge a low, displace back inside. Where are we? Fair value gap. So what can we anticipate coming this or next week, right? It is a short week this week, but we could still, with the news that we have, rotate to external liquidity. So let's head down to the daily chart, because this is where, this is where more models start to come into play, right? Right here, what happens? Internal, rotate to external. Why do we get chop? There's no internal range liquidity being met here, right? There's no fair value gaps being displaced here. So what do? Come down, turtle soup below, displace back up, take external range liquidity. We created a fair value gap. What do? Revisit it. Go purge external range liquidity. What do we do here? Displace up. Are those equal lows? Low 760. No, we actually didn't revisit it. But what do we do here? Right? Remember, premium and discount. This fair value gap doesn't matter. Why? Premium and discount. Don't worry, like I said, we will get into this. What do? Purge external. Purge. Rotate back into a discounted PD array. Fair value gap, internal range liquidity. Where do we rotate to? Buy side, right? Right here, what happens? Don't worry, we will go into how to frame a reversal from here and why these were invalidated. But what do we see here? We start to flip to bearish order flow on the daily time frame. Here, internal range liquidity, we have an SMT, so NQ doesn't need to go in there, right? If we take a look at ES, what day is that? Wednesday the 17th. Wednesday, right here. This fair value gap came into, so NQ doesn't need to. What happens here? Internal range liquidity. After purging external range, right? So we take external, rotate back into internal, take a high. Where do we rotate to? External range liquidity. Fair value gap, internal to external, right? So you guys are seeing that we are just rotating from these internal range liquidity pools back to external range liquidity pools, right? And the thing you have to understand is, when are we gonna, like right here, when are we gonna disrespect these, right? Whenever a higher time frame key level is met, right? If we take a look at the monthly, a higher time frame key level has been met this low. So if you're looking to swing trade, you're not trying to short here. You're waiting for a reaction from here to then see if we're going to head to this low. It gets ran through. What are we doing within here? Internal range liquidity, right? So if we go down to the 1 hour, we can start looking. We can actually go over today, because last night Pedro and I took a trade. We both took longs. Unfortunately, we didn't get the entire way out. We both did get out in profit, but we didn't get these highs, right? So what do we do here? Purge a high. Where do we go? Internal range liquidity, right? So we're holding internal. Where do we go after here? External. And it probably looks more clear on the 4 hour. Oh no, there actually isn't any fair value gap. 2 hour right here, internal to external, right? So let's go to the 4 hour actually. Right here, what do? We purge external, right? Because this becomes your range, right? We soup a high, displace lower. This becomes your external because we have a new range being set. Where do we go? Premium of the fair value gap. Go to external. What do we do from here? Come into internal range liquidity. Internal being met. External becomes the draw. Right? And I don't know if Wednesday the 28th. Yeah, we had an SMT at these highs. Right? And this is all going to come together whenever I start uploading more episodes, right? So you will understand how to frame a reversal from these highs down into external range liquidity. What are we doing here? We have came into internal range liquidity. We have triple equal highs. Where do we expect to go? External. So you guys are understanding what we are doing now, right? Right here, what do we have? A new range. This high being souped, displacement lower, this low to this high. Where do we go? Right, we fail to meet premium, so we come down, soup a low, come back up. Now we have a new range. Purge these highs, and I'm pretty sure actually this might be a daily fair value gap. Yeah, daily fair value gap down to external range liquidity, right? So I mean, I could keep doing this, but you guys are going to start to understand how to start framing trades from this, right? So if we want to take one more look, right here, we soup a low, we soup a high, we have a new range, come up to a premium, we hold internal continuously. What do? Come take buy side. Take buy side, reversal trade, take these lows. We actually don't fill out any of these fair value gaps. No fair value gaps here. Right here. So how do we frame a trade from here? We take sell side, immediate displacement back inside the range, internal range liquidity, go take this high, right? And if we go down to the lower time frame, let's say the 15-minute, this high now becomes your external liquidity pool, right? If we're looking at the 15-minute, this high is now your external range liquidity. So it's all fractal no matter what time frame you're looking at. It just gets more and more enunciated, I don't know the word I'm looking for, but it gets more important the lower time frames you go down, right? Immediate displacement above this high. If we go down to the 5-minute per se, what do we have here? Fair value gap. What do? Hold it, go purge external, right? Because now this becomes your external in the lower time frame. What do? Come back down, super low inside of internal range liquidity. Where do we go? We purge external. So you guys are starting to understand. You guys see this. So what I want you to do after this video is go onto your charts, right? And just look at how many times we come into internal range liquidity and rotate to external, right? That's all I want you to do. I'm gonna start uploading more videos about how you're gonna understand when they're gonna get ran through, like over here. Like at this high we had an SMT. So all these get ran through. We had an SMT with this fair value gap. So NQ doesn't need to get in there. We purge external. So go into your charts, watch how we come into internal and go to external. Watch how we take external and rotate back into internal. So I hope you guys enjoyed the video. It's a very easy concept, but you have to understand when and why we're gonna be running through fair value gaps, like right here, like right here, like right here, like here. So the more I start to upload, the more you'll start to understand when and why these fair value gaps get ran through. Hope you enjoyed the video. Other than that, I'm going to get out of here. Join the free Discord. I'm out. Peace.